Today, a former SEC official says internet influencers should think twice before promoting crypto. Crypto exchange Bybit halts operations in Canada. And Rene Reinsberg of Celo breaks down where crypto markets are headed. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto moving lower this morning after the Federal Reserve hinted that it might not be done raising interest rates. By noon Eastern, Bitcoin dropped back below the $27,000 level. Ether fell under $1,900. And one outlier was XRP. That token rose 2% as fans of the token eagerly await a ruling in the SEC's lawsuit against Ripple, which could come any day now. Okay, let's talk about the latest headlines. First, the former head of the SEC's Office of Internet Enforcement has a warning for influencers. Maybe think twice before promoting a crypto token. In a tweet yesterday afternoon, John Reed Stark said so-called crypto shills should fail at their own peril because they will get caught and prosecution against them would be like shooting fish in a barrel. Stark pointed to the SEC's case against Francis Saba last week, the notorious crypto influencer who goes by Ricky Bobby and is accused of a $100 million securities fraud scheme to manipulate the price of stocks. And over at the CFTC, the agency is warning derivatives-focused clearinghouses to be on the lookout for risks tied to crypto transactions. In an advisory put out by the CFTC's Division of Clearing and Risk yesterday, it warned that it will be focused on the potentially heightened risks associated with certain clearing activities like the ones presented by crypto. After that advisory went up, Commissioner Kristen Johnson put out her own statement calling for official rulemaking on how clearinghouses should handle risks involved in crypto activities. Last up, crypto exchange Bybit is leaving Canada. The firm announced yesterday that it will no longer let new users open accounts starting today, and that existing customers won't be able to add new deposits starting July 31st. After that, customers will have until September 30th to wind down and manage some of their positions. Bybit said in the announcement that its primary objective was running its business in compliance with Canadian regulations, but blamed recent regulatory development for the exit. Earlier this year, Canada stepped up its rules imposed on crypto exchanges in the wake of FTX, which also led to an exit from Binance earlier this month. All right, for our main story, Crypto World's Talia Kaplan spoke with the co-founder of Layer 1 blockchain, Celo, from Europe. Rene Reinsberg weighs in on the impact of the latest global regulatory developments and discusses his outlook for crypto markets.
So I want to start off by asking what you think is driving the crypto market right now. Last time you were on the show was in December, about 1 month after FTX filed for bankruptcy. You noted that investors were still digesting the news at the time, and you forecasted that the loss in investor confidence will continue for a while. Here we are, almost half a year later. What do you think has evolved since then? And do you think investors are gaining more confidence in crypto now?
Yeah, and let me answer it broadly. I actually think while we're still in a bear market, the last few months, we've really seen momentum pick up from users, from corporates. And I think while it's probably too soon to speak about a market recovery, those are typically early indicators. And I can make this more specific too. If we look, for example, at the active wallet addresses on chain, for example, for Celo, we've had an all-time high in April. We had an all-time high right before in March as well. And that's really a strong indicator that users are, coming back. They're using products that are actually bringing them real-world value. And I think that is quite different from the last cycle. And I think it's making me optimistic about the second half of the year and generally the move towards mainstream adoption. The second piece is around corporates, which, to be honest, they never really went away. Even as things we touched on this a little bit back in December, but, I think there was much more of an understanding of the failure of institutions like FTX, Celsius, and the promises of decentralized finance and everything that comes with it. And I think that's been those predictions have in a large part come true. So we now have really cool applications that are starting to really gain mass adoption. I've even just this week, FC Barcelona did a big launch of a digital collection that is supporting plastic recovery. So basically offsetting the plastic footprint. And doing that on the blockchain, doing that on Celo with plastics. These are really projects that are building sustainable solutions.
So, as you mentioned, a lot has changed since December when you were last on our show. Last month, for example, EU lawmakers approved the world's first comprehensive framework for crypto regulation. You're speaking to us from Berlin today, so I'm wondering,
Mhm.
what does this development signify to you, and what do you think it means for the industry as a whole?
I'm generally encouraged that we're talking about regulation of the space, right? This is all about bringing more protections for consumers and providing more, in a way, kind of certain environment for what can be done, what can't be done, right? Clear rules that I think many folks in the space have been asking for a while. I don't want to comment on the specifics of MiCA and other sort of regulations that are being discussed, but at a high level, I really welcome this, the conversation, and I do think the more clarity we have, the more we'll actually see, compliance, but also obviously projects being able to operate and not sort of, have that uncertainty looming over them.
And expanding on that, last week, IOSCO unveiled the first global approach to regulating crypto, drawing on lessons from the collapse of FTX. And the proposed standards cover dealing with market manipulation and cross border regulatory cooperation, just to name a few. So, what do you think about this big step from the International Securities Watchdog, and what does it mean for the industry?
Yeah, I think to me, this comes all back to first principles, right? I mean, this is a new technology. In some ways, we've yet to see, what kind of applications will come into existence. It's a little bit like the early internet when, we didn't really stop at GeoCity websites, but it's brought a whole, kind of a whole wave of innovations. We're getting to a point where blockchain technology, Web3 more broadly, right, in a way fades away in the background, right? Where it's powering applications without the users necessarily needing to see that, understand the technology. And so, and to me, in many ways, it's about enabling the infrastructure to flourish and grow, which also, as we're looking over the past few months, big tech giants like Google Cloud have entered, right, and announced partnerships, including with Celo, to support this development. I was just at Deutsche Telekom headquarters last week for a demo day of the T Challenge, a program they run jointly with T-Mobile to explore how Web3 can bring benefits to mobile carriers and their customers. And in many cases, really, again, the products that are coming from this are not necessarily needing to expose to the end user that they're running on blockchains, but they're leveraging the benefits of that infrastructure. And so with the regulation that's being discussed, really, my hope is that that's taken into consideration, that we're paving the way for more of that infrastructure to exist and be out there and grow, especially in markets where there's top tech talent like the United States and Europe as well. But yeah, obviously on the other side of the spectrum, right, we have seen examples where tokens and NFTs have not really been used in the way that they can be used for good. We want to make sure that we can have regulation that leaves room to have these positive use cases, grow, and there's also a way to experiment and have that innovation happen, but at the same time prevent some of the bad use cases.
All right, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.